Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. Boy, they continue to just get crushed. We saw not too long ago, we were talking, 1,300, maybe even 1,350, and it seemed like gold was on the rise. Dollar was trading mixed. A lot of geopolitical risks on the rise, and while the Fed was raising rates, they seemed to offset each other. But boy, it's just been a complete reversal. Got through 1250 this week. That's $100 difference. So at 1250 we got through today. We did recover. We backed up through it, and the market seemed to have found a little bit of its sea legs. But ultimately, we continue to see consecutive weeks lower, and they're not just little chips away. They're big moves. So gold prices right now, and speculators seem to have been on the sidelines waiting to get long again. They haven't. We'll get the numbers this afternoon as to whether or not they start to at least dip their toe back in the water. But ultimately, it seems to me that the spec longs who have been so supportive of gold prices as of late are now starting to back off, and they want to see either some kind of shift in news, they want to see some kind of a shift technically, something that would give them any sort of allure to buy. So right now we're continuing to see it's a very bearish spiral we're in gold prices. And if you look at the dollar, yes, the dollar has been stronger since I had that previously alluded to 1350 price in gold. Dollar's been, huge move higher, but this week was not one of those weeks. And we saw the dollar had a couple of upticks moves, but the swirling of trade talks and trade wars in China, that's really putting a dent in the dollar's trend move higher. So the dollar did end weaker, didn't really have an adverse effect on gold. Gold was up slightly today, but I think that was more because of the bounce we saw off those extreme lows. So right now, the dollar and gold sort of working against each other, then kind of working with each other. We'll have to wait and see next week when we get some key data, how the dollar performs, and then we can take a look at gold after. But with FOMC minutes and the employment numbers next week, perhaps the dollar will give us a little bit more clarity, because right now it's really just focusing on what's going on with China. And lastly, let's look at the PCE data we got today. Yeah, the inflation data, something we don't usually talk about when it comes to gold, but historically gold has been known for, or at least perceived to be, a good hedge against inflation. And so as inflation's on the rise, where are gold prices going? Well, gold prices are going down, especially since the PCE data core year over year hit the 2% that the Fed's been looking for, since April of 2012. We got that data today, and gold prices, while they were up a little bit, certainly didn't see a shift in the trend. So right now, that gold inflation relationship is probably not the historical one that people remember, or the one you learned way back when. I think right now gold, it can be a good hedge against inflation, but I don't think there's a real commitment there on the charts that shows you every time there's a spike in inflation, gold prices follow. So as inflation goes up, don't expect gold to follow, albeit it's going to be trading more against the dollar. So as we head into the weekend, gold prices, really seeing that bear trend continue. We did see a little bit of relief from that today, but next week we have FOMC minutes, which are expected to be hawkish, and we have an employment report, which, if it's stronger, will obviously add to that downward spiral in gold. This is Todd Colvin coming to you from the floor of the CME Group.